Hello and welcome to Dukascopy TV's Targets in Focus interview. Today, the head of FX at Jefferies Bache, Jonathan Webb, joins me to talk about the latest on the euro, but specifically the euro dollar, euro sterling and euro Swiss. Jonathan, welcome to the programme. Let's start with the euro dollar then. This week's Eurozone data has been stronger than expected, and of course we've got the ECB meeting on Thursday. What are your predictions on this pair over the coming months?
Well, I think first I'd like to give just a little bit of context, and that is, I think the market has been caught out generally by the strength of the euro. I think there's been a closing of long-term shorts, and also the effect of the repayments of the LTRO have actually meant that the ECB balance sheet has been shrinking at a time when the balance sheets have been rising in the rest of the world, most notably in the US and Japan. But we have a couple of things really driving the market. Firstly, the ECB. There was concerns that the central bank would maybe protest against the recent strength, but that sources have suggested that isn't the case, and we actually thought that was quite unlikely. Really, in the bigger picture, the euro hasn't probably moved enough for that to be the case. But the second thing that's interesting about the euro is that some of the positives that I've outlined have been offset in the last few days by concerns, firstly, about the Spanish political problems relating to a sort of a slush fund in the governing party, but also the Italian election, where Berlusconi is doing much better. And I must admit, I think it must fill other Eurozone politicians with dread. The very thought of having to negotiate an OMT with Berlusconi, if that was necessary. So I think that has both tended to undermine the euro. But actually, if you look at the bigger picture, I still think there's probably still room on the upside. And in fact, on the 3-month view, I'd look at euro dollar could still be a little bit higher, up to 137, back to the highs. But over time, we think, once this squeeze of positions is out of the way, and the problems of the economies, particularly in the periphery, come to the fore, and weak growth really comes to the fore in Europe, that we actually see the euro dollar down actually over the period, and so we could peak in 3 months at 137, but we'd expect probably in a year's time to see the euro back below 130.
Okay, let's move on to the euro Swiss then. Are we going to see a further rise for the euro against the Swiss franc?
Over time, I think that is. I think that's very likely. Actually, in terms of what I'm looking at this year, probably my main theme has been an unwinding of safe havens, and we've seen that obviously most particularly in the yen, and I think also money that went into the pound has come out. But I think the Swiss is a prime example. What we're actually seeing in the last few days is, I think, concerns about the Italian election has sort of weighed a little bit onto the euro Swiss. But we see over time that the economy will not do that well in Switzerland. But more importantly, money that has been parked in there as a safe haven will come out. And weak growth in the eurozone isn't enough to keep money in Switzerland. It's more a fear of a blow up. And we think a crucial change happened last July. With the Draghi speech about they'll do anything to defend the euro and also the OMT. So from that point of view, keeping money in the Swiss is likely to become less attractive over the year, and we can see euro Swiss back above 130 within probably by the end of the year. We wouldn't be surprised to see that at all.
Finally, the euro against sterling. The UK economy has been flatlining for months, and there's talks of further stagnation. We know the UK economy is closely linked to Europe. What are your thoughts on this pair going forward?
Well, it's interesting. I mean, that's the other prime example of a market that was long, similar to the you could say similar to the euro Swiss, where a lot of money came into the pound during the crisis, and that money is clearly going out. But actually, in this case, I think actually maybe the story might be a little bit different, in that we can see euro sterling higher. We suspect it could go up. There's maybe another point, couple of points left in it, another couple of percent. But over time, actually, we actually think there's signs that maybe people have got a little bit too bearish on the UK. And so, it's sort of a bit of a mixed bag in that, we can see the pound weaker, but the UK economy might just surprise. So they've done a lot of tightening already, and we just wonder whether or not the surprise, given just how bearish everyone is on the UK, could actually be on the upside. Again, this isn't to trade for today, but I actually think you need to be a little bit cautious about getting too bearish. The last thing to add on that is we have Carney speaking at the Treasury Select Committee on Thursday, and he made a speech suggesting they wanted that the central banks could move to nominal GDP targeting over inflation targeting, and I actually and that sort of also I think has helped to undermine the pound. But I actually think he may be more conciliatory at this point. He hasn't joined the BOE yet. He's only one of the member of on the MPC, and I suspect that thoughts that he will be really pushing that on Thursday might be misplaced. So there is room for a little bit of maybe just in the very short term that could be a positive for the pound. But really the big story for the pound is if the UK can actually show some signs of life, that would probably surprise the market.
That's all for now on Dukascopy TV, but stay tuned for further updates and further exclusive interviews. But until next time, goodbye.